How's it
Hello.
going?
I'm so glad that you're here. Do you want to introduce yourself and tell us who you are?
Yeah, my name is Darin Krejci. I'm a mortgage broker from Sacramento, California. Been doing it since about 2013. Grew up in the mortgage business. My mom was an underwriter my whole life. So I was at a really young age when I got educated on the mortgage process and seeing my mom on the weekends stamp files approve or, oh, they didn't disclose this bankruptcy correct. They can't get the house. This really is pretty sad, so kind
Oh,
of grew up into a second generation mortgage professional.
so it's in your blood.
Yes, it is. Yes.
And
There's a lot of payoff in the mortgage industry and with real
for
estate.
sure, it's so fulfilling personally. Yeah. How many brothers do you have?
One older brother who's also a loan officer.
Do you work
Yeah.
together?
Yeah. More independent, but we do work with Coast Home Loans here in Sacramento. So it's the same
Okay.
brokerage.
What do you do when you're not brokering deals?
I just had a baby. So my baby is 6 months old. And I also make music. So I'm a musician, play a bunch of different instruments. And that was
Really?
my dad was a professional musician. And then my mom was the mortgage underwriter. And so the first part of my life was like, okay, I want to be a musician like my dad. But then, get around like 22, usually life starts to,
No,
come at you
your
fast.
frontal lobe finishes developing and you realize,
Yes. Yeah. I was like, all right, I need to go the other way. But I do kind of relate that to, I was like, my parents are still together to this day and they're like just amazing people and how they raised me. It really does kind of reflect how I handle clients and how I operate my business, kind of like that family first type of energy, so very
yeah.
grateful for my family.
I love that. Thanks for sharing. So
Yeah.
you texted me something yesterday. I think a
First.
lot of people would be really interested to hear about this from all the different angles. It looks like there's a lot of different ways to use this. So if you want to start talking about it, if I could just jump in with questions that I have or I think people might have, that'd be great.
Right. So this year I've really focused on being a renovation lender, specifically kind of like the ADU world. It's become very popular and I think that it's only growing and I kind of want to get ahead of the curve a little bit. I think it's going to blow up. It's already blowing up in Southern California. So there are ways to finance big ticket renovations, like total home remodels, kitchen remodels, adding rooms, adding additions to a house, building ADUs, landscaping backyards. But a lot of the time it can be kind of confusing how to do that. So sometimes people use a type of financing that's just unsecured, like an 18-month renovation loan from their contractor. Those have very high interest rates in a short term, so very high payment. What I'm able to do as a mortgage broker is use your house to give you much better terms on renovation and construction financing. So this loan specifically is a renovation loan product. It is somewhat similar to an FHA 203K, which is semi well known, but 203K loans are our first mortgage product. Fannie Mae Homestyle is a first mortgage product.
And
So,
so I'm just going to clarify that for people who don't speak our language. That would be like
right.
when you're making a purchase, right? Like
Yes.
you can't refinance
Yes.
into it.
You can refinance to those, and I still do those. And there's some scenarios where they work, but the problem is that you would have to refinance into the market rate. So this loan is a second mortgage renovation loan. So it's a HELOC, a line of credit that you would put underneath your first mortgage. So if you have a low rate from COVID, this makes much more sense for you. So
Yeah.
how it works is you would get with the contractor first, get some type of plan, some type of ballpark scope of work, and gets an itemized bid for how much the work, the materials, the labor would cost. And then when the appraiser goes out to your property to determine the value, they're actually going to have those plans with them. So they basically say, okay, if you do this, if you build this permanent bedroom, if you build this other in-law suite, if you landscape this backyard and build an ADU, your property would be worth X. And so your loan balance would be up to 95% of that fully renovated value or the lower of 150% of your current value.
Okay. So that's the key, the lower of the two.
Yes. So generally, the first one we're going to look at is 95% of your future value. It's definitely a great product. I partner with RenoFi. RenoFi.com is the the number one industry leader in renovation loans in ADU financing. And they just started a wholesale channel. So I'm able to hire me as a hyper local mortgage broker with customer service and great communication. So I'm able to originate the sales. They take care of the project management part. So the draw structure, everything that relates to the communication with the contractor is done by RenoFi. It's a really good setup. They've been doing this partnership for about 2 years now. It's already resulted in a ton of deals, people wanting to think about things a little bit differently when it comes to their property.
Okay. So what you're saying is that if I wanted to move forward putting an ADU on this property, I would build a relationship with a contractor of my choice first, maybe get a couple bids. Then I come to you and say, here's what I want to do. You do the math, you originate the loan, you give me all the numbers for it, and then you originate it with RenoFi. And RenoFi opens a credit line, and then they connect with my contractor, and the contractor draws on it as the project goes along. Are there any stipulations about the draws or timelines, or when does
So it's a 10-year repayment schedule. So that means for the first 10 years, you're paying interest only. So that's really great for when you're building an ADU and you're doing these larger renovation projects, because you can pay interest only as it's borrowed. So that first draw on a $150,000 ADU, your first draw for like soft costs might be $25,000. So you're only paying interest on $25,000. Then when they're finished with that phase, the next phase is going to be trenching, right? Getting the utilities hooked up or foundation. That's going to be an additional $50,000. So even though the interest rates can be a little bit higher on a HELOC, you actually can pay less interest overall compared to just having a lump sum and paying interest on that.
Just to clarify for everybody, when you open up a HELOC, oftentimes you have two options. You can pull all of it and you get a better rate sometimes if you pull it all out, and not everybody offers that. Or you can set it up like this where you draw and you pay as you go, but that tends to be a variable rate. So talk to me about the cost of this loan.
So it's based off the US prime rate, which is at 6.75, but the prime rate plus margin. The margin depends on how much your combined loan to value, your first mortgage and the second, and then your credit score. On those very low, like around 60% combined loan to value, the margin is going to be much lower. It could be about 0.375. Or if you're going to be borrowing about 95% of that full value, it will be higher, and you're looking at rates that would go 8.5 to even 9.5% on that one.
Okay. Is this using only the asset, the home, like a DSCR loan, or is this looking at your income?
Yeah, so this is a primary residence only loan. It's a great question. You can use this on a second home as well, but it's not anticipating any cash flow. So this is a full document loan. That means if you're a business owner, you need to have 2 years of full tax returns, or you do be a W-2 employer with a W-2 and pay stubs to show your income. That's for most renovation loans that are like this, that allow you to borrow off the future value. It'll always be like a full document type of underwriting.
So what's the minimum credit score?
Minimum credit score is 640.
640. Okay. And is there any prepayment penalty on that 10 years?
There's no prepayment penalty. So after the 10-year interest only period, that basically means it's the draw period. You can take money out, pay it back, have it sit there, the full lump sum. You can keep, just like a credit card. After 10 years, it'll switch to a 20-year fully amortizing loan where you will pay principal and interest for the next 20.
What's the difference between this and a HELOC?
So the only difference between this, this is a HELOC, but this comes down to the value. A traditional HELOC, which, everyone can find a HELOC with their credit union, their bank, any mortgage lender, that is only going to go off the value that it currently is. You can't add your plans to when your appraiser comes out on a regular HELOC, and they won't extend your balance. This is a renovation HELOC that allows you to borrow off of that future value.
I'd really love to know what a payment would be. If anybody asked me to do math on the cuff like this, I would be instantly sweating.
I'm sweating bullets right now. So I have a visual that breaks this down. Let me pull that up for you real quick. So this is on a very large ADU project in San Diego, where it would be a duplex 2-story ADU, and it would be $500,000 is the cost. The first draw on this estimation would be $100,000. So you're paying interest only on that $100,000. So we have $593. So
Got
let's
it.
say that this first draw is the first milestone. And let's say you only pay that for a month and you pay 593. The next draw based on your construction milestone would be $50,000. So you're only paying interest on 150. You're only paying 30% of the line amount. So you're only paying $190. Your payment will keep going up until completion. So this is an 8 draw schedule. After that 8th draw, your total is your draw equals the line amount of 500,000. And this person's principal and interest would be $3,914.
What else? What am I not asking? What am I forgetting?
So let's see. So if we're talking about building ADUs and stuff, I do webinars, I have ebooks on this. It takes somebody looking at your full picture and saying, okay, which one is actually going to make the most sense? Because sometimes a first mortgage cash out refinance actually will make more sense than a HELOC. Sometimes the first mortgage renovation loan will make more sense than the second mortgage renovation HELOC that we're talking about now. It really takes someone to look at your whole profile, someone that knows the options, someone that knows the contractor, someone that knows the realtors, to be all on the same page on what we think that value you're going to get from your home if we're going to use our renovation products. It can be confusing. There are many different options. There's even unsecured options. There's hard money, or there's like construction financing. There's a lot of different options that people have for doing bigger projects like this. Like I said, I recommend people to talk with me. My website is lendingadu.com. And I kind of go over all of the different options, which scenarios would make better sense. I have zoning rules for all the different counties and the markets that I serve. I do business in Sacramento, Bay Area, San Diego, and LA. If someone's just like, okay, here's how it works. Here's one option. That's kind of a red flag. You want someone to say, hey, I'm going to look at this.
I think that if there is one thing I want people to understand is that not all lenders are created equal. Like you can't just walk into a shop and make sure you're getting a broker that knows all the products that are out there and the massive amount of regulations that go with every product. And so, like, for example, just even someone that understands construction loans, is not an easy thing to find. And then the fact that there's consolidated lenders and direct lenders and wholesale brokers and all this stuff, I just think the general population doesn't know that stuff. So I'm on a mission.
Some colleagues or just other people in the industry, they think like, hey, I don't want to confuse the client. I just want to give them one option, just make it really simple. But that's not my philosophy. My philosophy is like, I really want to educate my clients on pretty much most of the options that are going to make the most sense. But it's on me to break it down in an easy way where they can understand. So it's not confusing. So it's not overwhelming. So it's not like, oh, okay, with all this information, now it's deer in the headlights, right? That's not what my goal is. My goal is to just have very clear options that make sense. And for you to understand, okay, why this one wouldn't make sense or why this one would.
Yeah, I love it. Okay, what else am I not asking?
So let's see. So I have a product where you can buy a duplex and build 2 ADUs in one loan with 5% down.
Is it like a DSCR kind of thing?
Nope, it's a primary residence. So it's very similar to what we're talking about this whole presentation. It is a renovation loan using a Fannie Mae Homestyle purchase. This just changed in December. The guideline changed and it's effective in March 2026. So before, you could use a renovation loan purchase on a single family house and you can build 1 ADU in that same loan. That's been the policy for a couple of years now. They just expanded guidelines and now allow multiple ADUs on multi-unit properties. So if you are going to live in one of these units in the duplex for at least 12 months, you don't have to make it your forever home. But if you can live in it for at least 12 months, now it's a primary residence loan on a renovation loan. So you're able to wrap in the financing for those ADUs on a multi-unit property with only 5% down.
Okay. So the questions that immediately come to mind are, is this anywhere or does it have to be zoned for, or with the new ADU laws, is it just really loose?
It's opened up. There's only certain zoning laws that it wouldn't work. It's going to work in the vast majority of all zones in California. The problem is you have to have an amazing realtor to get this done. There's no other way. We cannot have a part-time couple deals a year realtor, because this loan requires a lot of cooperation. Like if me and Nicole were to do this deal for you, it'd be very realistic. The house that just pops on the market. Everyone's at the open house. We know there's going to be several offers over asking. Is this loan going to work for that? Probably not. That doesn't mean that we can't find other properties that maybe have been sitting a little bit longer that we can show like the potential and still able to close on a deal like this. It would take a little bit longer to close. I would need about 35 to 40 days to close a deal like this. And there is quite like, it can be a hectic process because we have the contractor involved while we're trying to close this loan. So it's doable. I'm talking to several clients that are pre-approved looking for houses right now, utilizing this product. So I'll report back after in a couple of weeks and let you know how that's going.
That is a house hack on steroids. That's just like a house hack jacked up. So let me ask you this. I think the question that people are going to go is, okay, great. And immediately, how would I ever find a property that I can do that on and run the numbers and all that kind of stuff? What's been your experience in finding those properties?
I think we talked about this in the beginning of the call. There are certain zip codes that have more ADU development. That is going to be a saving grace. Anytime you're doing a loan like this, even on the HELOC that we were talking about, the renovation HELOC, if there's no equity in the property, you are looking for the appraiser to cover dollar for dollar the project cost. That doesn't always happen. That's not guaranteed. If you didn't have the funds to bridge that gap, all you would be out is your appraisal, which could be $500, and then just have to try to find another property. If everything aligns right, it's really about finding duplexes that are on a nice sized lot. I think you don't need as much room as you think on the lot to build this. It's really going to depend on having the lender, the contractor, and the realtor all on board with the same plan, with the same communication. That is essentially what it all boils down to.
Got it. I love it. Am I forgetting anything?
I'm trying to think. So renovation loans on a house that is distressed. So we, as lenders and realtors, we get this all the time. Clients, hey, I want to buy this house. Well, you only have like 5% down. It's not even going to take conventional, it's hard money or cash only. With a renovation loan, this opens the door for that. What happens is the house, like let's go back. The house is uninhabitable. Because you can buy this house and it's uninhabitable, they allow you to take 6 months of your payments, principal and interest, attach them to the balance of your loan. So you buy the house, you stay in your apartment, you stay with your parents, your folks, wherever you can stay for that 6 months while the contractor is making your home habitable. Once it's done, then you move in, construction is complete. Now you have created a single family habitable home that you can sell that is going to obviously create a lot of equity. If you're not going to live there, you can sell it and someone else can have conventional financing to buy that home. So it's just another way to do that when on those properties that are, like I said, cash only or hard money.
That's great. And is that the 203K?
203K or Fannie Mae Homestyle. I like the Fannie Mae version better. The FHA 203K is only for credit scores like below 670, around below 660.
What is the floor on the credit score for that?
For FHA 203K, about 580. If you have 10% equity, then we can go down to 500 actually.
Wow. Very, very cool. Awesome. All right. Well, gosh, I'm going to have trouble editing this because it was all so good. I didn't know that you have ebooks and all that kind of stuff. I'll have to check that out.
Yeah, I started like 2026 when I saw that guideline about multi-unit properties and multiple ADUs now. It was like during in the middle of December where everyone's kind of not focused on work as much and it was just kind of quiet. They kind of snuck that in there and I just thought, okay, I could be a pioneer in this. I could get the wheel moving on it and niche out in something that's not as saturated yet. Because it's only a matter of
especially, I just feel like most loan agents that I talk to don't know, just don't even bother.
Yeah, and they are hard. They are hard. You need the relationships in place. You need to be able to, crunch the numbers a little bit differently. It's just there's way more margin for error to mess that up.
Okay, so tell us, how can people get a hold of you to ask more questions?
So my website is lendingadu.com. There's a button to schedule a call with me. My other website is djkloans.com. That's just my traditional mortgage apply now pre-approval website, has reviews there. But yeah, those two websites, my Instagram handle is djk_mortgage broker. Then also have @lendingadu Instagram handle.
Cool. Awesome.
Cool.
Thank you so
Appreciate it.
much, Darin.
Thank you for the call. Have
You're
a good one.
amazing.
Thank you.
Okay,
Appreciate it.
bye.